Hello, everyone. Welcome to our pre-recorded Wednesday Q&A. You will see it Wednesday, June 29th. So
June is already over. It's amazing.
Crazy. Mm-hmm. So, and that's one day after your 20-year, right? June 28th?
Yeah. June 28th is my 20-year anniversary.
At ITM Trading.
At ITM Trading, yes.
And for those of you who don't know, we take your questions submitted to us via email to questions@ITM Trading, and we ask them we put them on the screen, we ask them live so you get a true organic response. Mm-hmm. So,
all right.
Ukbay asks.
Which I was curious if that was, and I would really like to know, if that's really buck in Pig Latin, because that's exactly how you would say Ukbay.
And spell
it.
Ukbay asks, where will the liquidity come from during a market melt-up?
The central banks! And that's what's going to happen. We're going to get a pivot. That's why, there are a lot of reasons why we're in a really dangerous situation. But we'll see how much pain the central banks can handle before they do a pivot and make the level of money printing like they did in 2020 look like chump change. Just like they did make what they did in 2008 look like chump change. We've now gone since the great financial crisis, 2008, where we were at, the Fed's balance sheet was at $800 billion, up to $9 trillion. It's just fiat.
So much higher than that now. All right, Avid R asks, when the market crashes, how long until a recovery?
The bigger the fall, the longer the recovery. And we'll be looking for things like a cup formation to know when we're near a bottom. And this is our opportunity for those of us that hold gold specifically for this function to convert into income producing. But I can't tell you how long a recovery it will be because what they're going to do and what they are doing, so it's not what they're going to do, what they are doing is shifting us from crisis to crisis to crisis to crisis so that, this next piece, this next recession is going to be more like a depression, frankly. And then they're going to pivot and they're going to print so much money, so much new money that it'll make the inflation that we're dealing with right now look like nothing. Seriously, we're going to be wishing for these times if we are not prepared with physical gold and silver in our possession. So I can't tell you how long a recovery. What I can tell you is that I have personally planned with my barterable position for 10 years. So, it could take longer than that. It could take less than that. And if it takes less than that, it doesn't really matter to me because I have gold and silver. So booty, hooty, rooty, manooty. I like doing it when it doesn't really matter whether I'm right or wrong. Now, technically speaking, I can tell you that this recovery phase usually takes a percentage of the second phase of the system. So that's why I personally prepared for 10 years. But I can't give you that information. Depends on how stubborn they are, and it depends on how quickly how soon we will get to the real reset. In other words, then backed by gold. That's how you'll know that we are in conclusion, is when they put a component of gold in the new currency. So it depends on how quickly that will happen, how quickly people will adapt to the CBDCs, the digital currencies, because that's where they're taking us, central bank digital currencies. But I can tell you that I'm planning for 10 years. Might be longer, might be less.
All right, so Paul S. asks, you often mention that we are in the beginning stage of a financial reset. As someone who believes there is no other alternative than that, can you tell me what visible signs there will be as this begins to pick up steam?
We're experiencing it right now. The rapid level of inflation and then the panic of the central banks. And if you have not looked at the video that I did on the markets losing confidence in the central banks, go back. I did that last week. Go back and watch that, because those are the visible signs. The central banks are panicking. For too long, they had the narrative that the inflation was transitory. Well, didn't prove to be transitory. And if you were watching this station since the beginning of this, actually since they changed, where instead of targeting 2%, they were going to target an average, that's when I said, oh, you better get ready for the inflation. They're getting us ready for it. So
You did say that.
Of course I said that. That's because it's obvious. But now they're really panicking. So they're attempting to catch up, but they don't really have the tools to fight all the money printing that they did, which is really what skewed the demand supply side of this whole thing and pushed all of those assets that they targeted openly for reflation, so stocks, bonds, and real estate. We're already seeing all of these signs, and we are headed, there's no doubt in my mind, that we have already begun to enter a hyperinflationary depression. This is way worse than stagflation. And we're already in stagflation. They keep talking about the threat of it, but GDP was down, so it's not considered an official recession because we need several quarters of that. But we're already here. So visible signs would be what we're seeing, an uptick in inflation and a downtick in growth, and central banks panicking. We're here, and they volunteered their credibility. That scares the crap out of me, and I'm not kidding about that. Because that is everything in a con game, is credibility. So when you volunteer that, what do you think that means?
What do you mean volunteered that?
Well, when I mean volunteered that, they kept saying that it was a 50 basis point. They were going to increase by 50 basis points. By 50 basis points, this is what they transmitted through their forward guidance to the markets, so the markets could be prepared for it. But then they ended up raising it 75 basis points. So they had to know, they're not stupid. They had to know that they were doing something completely different than what they had telegraphed to the markets that they were going to do. And so that's what I mean by volunteering. Because now the markets don't believe them anymore. They can say 50 basis points, they can say whatever. And the markets are going, really? Because this last time, you told us one thing and you did another. So that's what I mean by volunteering. And I think that's a very big deal. Because they had to know that that was really going to rattle the market confidence in their forward guidance. So they just killed it. And forward guidance, for those that aren't familiar with it, forward guidance has been a tool that's been used quite extensively since 2008. And what it does is it kind of front runs central bank policy. Because if the central banks tell the markets that they're going to raise interest rates by, for example, 50 basis points, well, we know, okay, well, I don't have anything straight here, but this is principal. These are interest rates. So when interest rates go up, the principal value of all of the bonds and all of the debt instruments out there goes down. When interest rates go down, the opposite happens, right? So, and it is actually at a level because bonds must always be at market. So that means that any new bonds or any old bonds, whatever that interest rate, market interest rate is, that's where they must be. So here they're telling the banks and Wall Street that they're only going to go here, and instead they went here. That's what I mean by volunteering. And that is a very big deal, because I would imagine that would be the last thing that they would want to give up. You have any opinion about that? But
no,
was I clear on that?
Yeah, oh, for sure.
Okay. I really want to make sure that people understand that, because that is so critically important. And I am reading, comments from Wall Street and stuff like that. So I can see without a doubt that Wall Street has lost the confidence in the central banks. There's only one other level of confidence that needs to go away, and that's the public confidence. And the faster inflation runs, the hotter it runs, and those things that are really obvious. I mean, what did the Fed say, too? That, they were always talking about core inflation, which strips out food and strips out energy. But now they're talking about paying attention to headline inflation, right? They're panicking. They know they're out of tools. And they volunteered.
Raising rates into the headwinds, which is very difficult. They know they're pushing it further into a recession. They're going to push the real estate market down. It's going to be bad for the stock market. They know all these things.
Right. So how much pain?
Excuse me. Yeah, I know. It's so interesting.
Oh, it's fascinating.
What a predicament they're in right now and why they would be panicking, right? I mean, it makes sense.
Right. But why would they volunteer their credibility when they need that credibility to keep this con game going?
Well, I didn't watch it, so did they say anything about that? Did they address that? Did they
No.
say, oh, well, I know we said 50 basis points and we did 75. They didn't say a word about it.
No, they didn't say a word about it, but Wall Street did.
Yeah. Well,
they said forward guidance. Bond traders have said forward guidance is dead.
Isn't there something coming up where they're going to be a test? There's going to be testimony, right?
Well, that was today.
Oh, it was today. And so
it was last week because we recorded this. It was a week ago today.
Oh, okay, I gotcha. I was like, wait, hold on. I think it was soon. It was soon.
Right. And I mean, they always have
so
those meetings.
Have you watched it? Did you see that?
I did. I listened to the whole thing.
Okay.
So, yes.
And in that testimony, they didn't say anything about that. They didn't say, oh, yeah, I know we told you 50 and we did 75.
No,
and
because they were in front of the Senate Banking Committee.
Credibility a little bit, right? Like, hey, this is the reason, it doesn't usually happen. We don't plan on doing it again, right?
Oh, well, he did say when he raised his 75 basis points that the next one might be 50 basis points. So he's kind of trying to grab it back. But no, you once you do something different than what you've done for the last, this is 2022, and that was 2008. So 14 years. I think it's a little shocking. And once that confidence is lost, how do you get it back again? They're going to try, and that puts everybody in more jeopardy. Because they're gonna go big, shock and awe, unless everything gets too painful for them. And that's what we don't know. How painful is it going to get before they turn around and they print 200 trillion? I mean, it's irrelevant, but that's how close we are to endgame with them panicking. So, yeah, no, I don't think they can get it back that easy.
All right, so Robert B. asks, do old debts really matter in a global monetary reset?
Well, history shows us that the little people, the general public, doesn't really ever get out of that debt. It just makes them more of debt slaves. Now, governments and those that are issuing the debt can default on that debt, or they can repay it with hyperinflated dollars, which is actually part of the strategy that we issue here on fixed rate. So I don't necessarily think that old debts matter for governments in a global monetary reset, but considering the level of control that governments and central banks want to have over the individuals, I think it will matter very, very much. That's why you need to be, I believe this so strongly, you need to be in a position to whatever debt you have that, boom, you can pay it off in a moment's notice. Same as governments with dollars in this country that have zero value. And we're pretty close to that now, but we're going into the hyperinflation. And that'll, you'll if you were to actually be executing our strategy, you would be paying off those debts, and therefore it wouldn't matter in a global reset because you're paying them off for nothing, right? But
right,
you got to have gold.
And as long as you have enough funds to be able to
well, if you have enough gold, you're going to have enough funds, right?
But I'm saying enough funds to buy the gold you need in order to execute the whole thing.
Well, true, but the sooner you start and the sooner you add to it, the more you have.
Yeah, totally. Well, especially with it being undervalued.
Right.
Okay, so Polish Silver Stacker asks, why do people believe in central banks if they want our plight?
I'm not sure what they're...
Like,
asking?
I think they were kind of getting at, like, if central bankers really want to see the downfall.
Oh, okay.
Right? Or like, central bank digital currencies, the
All right.
inflation keeping up, going higher than wages, right? Like, if they really want our plight, why do people actually believe in the central banks?
Well, I don't know, because I don't. But
yes, but you
this
also
is the world
know,
that I
you
live
also know.
inside
I think
of.
it's more about perception management, right?
100%.
They're great at perception management,
They
and
are.
that's why people believe in them.
Yes, I would say that's true. We have a pretty strong, the public has a very strong, well, it's been declining. But generally speaking, they want to trust our institutions. They want to trust our government. They want to trust our central bankers. And so it's the normalcy bias, but you make a very, really valid point, because all of that is about perception management. Chair Powell came out and said that it really is. They've already lost the inflation expectations at the short-term level. They've actually officially lost it at the intermediate term level. They are fighting desperately, and this is globally. The central bankers are fighting desperately to retain those inflation expectations, not reality, but the expectations of inflation on a long-term level. And they're starting to lose that as well. Because once they lose that is the confidence of the public in the central bank, that they actually can control inflation, which they can't. We're at a point, they have been able to. That's really been the big genius of this whole fiat money experiment that had never been done before. They created the Federal Reserve. Up to that point, all central banks had was a 15 to 20-year charter, mostly, right? So they went away, unless the government renewed that charter, they went away after 15 or 20 years. Because governments understood that what central bankers would end up doing is inflating away the value of the currencies. So this was the first time, and really the hyperinflation typically happened during war periods when governments needed to create a lot of money to pay for the war, right? So you'd go into hyperinflation, and then there was a long period, like, I think, don't hold me to this, but I did a piece on this years ago. I think it was like an average of 52 or 54 years between major wars, between that hyperinflation, so people forgot, right? And then they could do it again. But once they instituted the Federal Reserve, it was in 1927 where they gave them an unlimited charter. So their first charter was for 20 years, so 1920 to 1933. Coincidence?
1913.
1913 to 1933. Yeah, thank you. But in 1927, that was the first time any central bank had been granted a perpetual charter.
I thought they made it. I thought it was 100 years, because I remember reading in 2013 that it was coming up for renewal and no one was talking about it.
No, it wasn't. No. It was a perpetual, because I read all the documents.
Okay.
So that was a perpetual charter that they were granted. In 1928, that's when the industrialists and all the moneyed people that knew that Wall Street was a Ponzi scheme, this is when the public started to buy into it, and when the industrialists really started to sell out. And remember, that's also when they were giving credit to the general public for the first time. It was like in the teens, they were turning us into a consumer-driven economy. So by the time you had a perpetual charter and you had the industrialists sell out and capture most of their gains, right, because they understood that it was just a paper market, then the credit was cut off to the general public, and you had the crash of 1929. So, the experiment then really, especially in 1971, when Nixon took us off the quasi-gold standard, what he really did was hand over the full control of inflation to the central banks, who know debt and interest rates. And so that was like the death knell. You give it over to bankers whose real job is not really taking care of the public, but taking care of the banking system and the private corporations around them. So, yeah, why do people believe in central banks? I have no idea, because I sure don't.
Because they want you to.
Yeah, thank you. That is just the right answer. So we've had really a very busy week, and there's a lot that's going on. So make sure that you watch my recent reports on what's happening in the European Union, because their ability to stay together as a union is being tested again. And I mean, ultimately, they're going to fall apart, because no pegs can have ever held up over a longer period of time. So that is a really critical one, because it will impact everywhere in the world. And the key one, though, the single most important one, is how the Fed is also fighting inflation. Well, this is not the key important one. That was the week before. But how the Fed is fighting inflation by capping workers' income. So they're going to make sure that unemployment goes up and stays up, so that the employees have no more bargaining chips to ask for more money, because according to the Federal Reserve, that's what's causing the inflation, not their money printing, not all of what's going on in the rest of the world, although they'll deflect and deflect and deflect. But yeah, it's those wages of people going up. So you want to absolutely, I think I've been putting out some pretty good work. And you don't hear me say that all the time, but my mother always said, when it's true, you can say it. And these are really important videos, particularly the one where the Fed has volunteered their credibility.
That one was called Pattern Shift?
Yeah, Critical Pattern Shift, the single most important video that I've ever done, because that is the single most important pattern shift that I've ever actually witnessed. And it surprised me this soon. I knew it was going to happen, but I didn't really expect it yet. So that indicates where we are in this trend cycle. Get food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done. Get it done. The clock is ticking, and we only have as much time as we have. And who knows how much that is, but it's growing. The Fed is panicking. It's short. But if you have not already, absolutely, you need to get your strategy in place. They have a strategy. You need a strategy. You want to sustain your standard of living, but you also want to be in a position to take advantage of what's happening. I mean, that's how wealth always transfers. How about if it transfers your way? I think that's just the right idea. So give us a call or click that Calendly link below. Set up a time to talk to one of our Gold and Silver Strategy specialists, and they'll help you establish your goals and establish a customized plan. And I think that is essential and critically important to do ASAP. But if you like this, please give us a thumbs up. Make sure that you leave a comment and share, because ignorance does not make anyone immune. It just leaves people vulnerable, and this is not a good time to be vulnerable. So you know it is totally time to cover your assets, and the foundation of every portfolio needs to be physical gold and physical silver, real money, and we utilize the Wealth Shield to help you, sustain your standard of living and grow your wealth base. So until next we meet, please be safe out there. Bye-bye.